What is happening, my gurus? I hope everybody's doing well despite all of the thunderous FUD that keeps coming our way in the macro, in the micro. It's not an easy start to the year. I don't think anybody planned for this type of Q1, but hey, it is what it is. And the nature of this game is that we have to roll with the punches, as it is in most games, but especially in the finance game, as nobody has crystal balls and very few people have the inside info that is needed to make the solid trades every single time. Funny to mention that. Basically, one of the hot topics at the moment, especially in the States and coming out of the States, is that they are trying to stop politicians from trading in their personal capacity simply because these people have the most inside info you could ever imagine, especially a woman like Nancy Pelosi and Peloton Capital. All you need to do if you want to make solid trades in the game is you just need to follow Nancy, see what she's trading. I will share in the Telegram channel. I'll definitely share a link where you can actually follow some members of Congress's personal trades. It just gives you sort of a good indication as to where their heads are at. A lot of it is in tech, a lot of it is in biomed tech as well, and a lot of it is in supply chain infrastructure, which makes you think. It makes you think about where they think the world is going. I think that they know a lot of things that we don't. So I think it does prove itself as a good point and prudent to maybe take a look and see that. I will post the link in the channel. But for now, let's hop into the charts. I just want to say thanks for tuning in again. And as always, please, if you guys are enjoying this content, to help me share it, get it out there, like, subscribe, comment, do everything you can to help me. Let's get this growing. Let's share the guru love with the world, and let's hop into the charts. Cool. So basically what we are looking at here is we are looking at the daily chart on Bitcoin against the US dollar. What I'm going to do first is I'm going to just put on this slightly depressing band. I'm going to quickly just open up the screen. Cool. So basically what we're looking at here is what Ben Cowan has now termed the bear market resistance band. So it's normally an indicator called the bull market support band, but it is now the bear market resistance band. The only reason it's called that is because in order for us to ever consider ourselves in any sort of bull cycle, bull rally, whatever you want to call it, we are going to have to not only clear this band, but we're going to have to turn it into support. And you can sort of see where we did that and what happens when we do that. So here's a good example. Here we came down, we tested the bull market support band, and then you could see what happened there. Over here we came and unfortunately we collapsed, and you can see what happens once we collapse. This band sort of becomes extremely volatile and extremely difficult to crack up, which explains where we are at the moment. Just from a sort of technical perspective, what the bull market support band is it's just estimated moving averages. It's a 21-week and a 50-week moving average. Both of those compiled together to become the sort of support mechanism for where the bull market / fair value lies in Bitcoin. Cool. So that's basically what we're looking at over there. Unfortunately, you can see that it is quite severe, and we have a very long way to go to even reach and start entertaining this sort of bull market support band / bear market resistance band again. But time will tell, and I'm keen to see what happens. So that's pretty much where we're looking in terms of bull market versus bear market. I think it's safe to say that we're definitely not in a bull market at the moment. I would call this somewhere between a neutral market and a bearish market. I'm not going to go ahead and say it's a bear market. It's definitely a downtrend, because I want to show you guys what a bull market actually looks like. And I think this is an important exercise for everybody to see. The nice thing is that you can actually see this across many of the coins throughout crypto. A lot of the altcoins go through this, where they will launch, they'll see an absolute pump to the top. Sorry, I'm just going to quickly change the color of the thing. So basically they will they'll come here, it will launch, you'll see the IDO prices, the ICO, everybody gets in, and then obviously the seed investors sort of sell off, and then it leads into this thing, which basically puts that token into somewhat of a bear market until, especially in the gaming world, development happens and they start coming back up again, and then they start growing. A good chart to look at this example would be Sandbox, and I will show you guys exactly what I mean with that. But on the topic of Bitcoin, I just want to show you guys what a bear market actually looks like in Bitcoin. So as you guys can see, this was the 2017 rally. There was a massive bull rally leading up towards the end of the year in 2017. In December, early or late December, I think it was, we started seeing an absolutely severe crash, which led to a very long-term, 1-year-long bear market, which then saw a pump to lower highs, and then another sort of lull, and then one last time at the bottom here, which was the COVID pandemic situation, before continuing up and out to created the new all-time high madness that we have been seeing over the last 2 years. So that is what a bull market, versus a bear market looks like. And I want everybody to just take a look at how different this is. You can see that there wasn't sort of one big peak, and that's why everybody was calling a bear market in May, was because it came down from a peak, and everybody thought it was just going to do this sort of thing, go down here, test the lows, test the previous all-time highs as support, and then come up and out. But it didn't do that, and the reason it didn't do that is because it's a much bigger market now. It takes a lot more to move the market. B, there is huge mainstream adoption, both from banks and institutions, as well as retail investors all across the world. So I think that changed the mechanics, and that changed the mechanisms of how the bull and bear cycles work. And that is why I do believe that we will never see these extended bear cycles again. I think that those are old paradigms. And I think that now with this sort of institutional adoption, and especially with this topic going into the mainstream, we might see, sort of some bearish behavior and some long-term sideways markets, especially with the advent of Biden talking about regulation and now national security and all this FUD crap. But basically, it is going to help us to move forward. And ultimately, we do want to be, I know it sounds funny, but we do want this to be regulated, because this is the future of the financial system. It's not a get-rich-quick scheme. This is the thing that's going to change the disaster that is the fiat system, especially when it comes to debt and lending protocols, inflation, interest, and the works. So basically, that's where we're looking at the moment. Something else I want to draw to your guys' attention is obviously we're in this rising channel over here, which is these two blue lines going across, and that is showing us that the value is ultimately rising. I'm not saying that we can't collapse and go down here to test old lows. It's very possible. Of course, there's massive support at 20,000. I don't see us going anywhere near there at this time, to be honest, but I would not rule out maybe a little drop to confirm 28 to 30,000 before a continuation up. However, there is some strong support in this rising trend line, where we are putting in higher lows on multiple different time frames. So that's basically where we're looking at with the daily chart in Bitcoin. I want to just show everybody something interesting. I want to show you guys the correlation between the way Bitcoin used to look, which was that sort of rise up and then into a bear market lull. I want you guys to take a look at the stock market for a second, and I want you to just see how the stock market looks in terms of its peaks and valleys, compared to the way we were just seeing now with the old paradigm of the way that Bitcoin market cycles were working. So this is basically the stock market. Obviously, as you guys know, you've been following, we've seen some crazy action in the stock market, especially off the back of the interest rate hike threat from the Fed and the rather hawkish stance from the Fed as well. Again, just to be clear here, a hawkish stance means that they are looking to tighten things up, looking to change things up, and that obviously scares investors, because it means that there is less sort of leeway in terms of borrowing, in terms of lending, and in terms of repayment interest rates. Whereas when the interest rates come down, lending goes up, charts fly, we're all good. It's not always doom and gloom when they raise the interest rate hikes, just to be clear here. Historically, it hasn't always been a damaging factor, but I think that this is good for the long term. Unfortunately, they're obviously kicking the can down the road a little bit, as Alex Becker says, but it is what it is, and I think that they know what they're doing in terms of sort of maintaining a somewhat stable economy. So let's see what happens. I think it's going to be an interesting quarter. They're going to raise the hike, they're going to raise the rates in March, and it's anyone's game from there. But the reason why I wanted to show you guys the stock market was to take a look at this. So you can sort of see that it's starting to put in Bitcoin's starting to put in similar sort of price action to the stock market, where it's going in valleys. There's ups and downs and swings and swings and swings. There's lows and highs. But overall, when you look at the stock market over a 2-year, 3-year, 4-year, 10-year, 100-year period, it's only ever gone up. This is it may be a less volatile market. The returns may diminish over time, but the gains over a long period of time in terms of a long-term stable investment are massive. You can even see that even with Corona actually only took us down to, previous levels of support, which would have been, a few years prior, 2017, 2016. Etc. And people would have said, this could have caused a recession, which it absolutely could have. But these guys print more money where they have to, and they keep us afloat. But the point here being that Bitcoin is obviously becoming a lot more like the stock market, and we just have to appreciate it for what it is. The good news is that there's always tradable moves in the market. People make tons of money in the stock market, and crypto is still way more volatile than the stock market by a factor of a couple hundred. So I think we're all good in that sense. Now, just before I carry on, I want to maybe just talk about a bit of an intraday outlook for Bitcoin, how I see today playing out, potentially the weekend as well. Obviously, I'm just delving in a little bit deeper into this with a slightly longer video, but there's a lot to cover. There's a lot of things going on, and I think we all have to just sort of be aware of the dangers of where we're trading, to trade smart, not get too hectic with risk, not be obsessed with finding the bottom, and rather be dollar cost averaging in at these levels as well, especially for those of you that do have capital and for those of you that are looking to buy. So I just want to quickly change the time frame here just so that we can look at it on a 4 hourly or even a 1 hourly, but I think 4 hourly might just be a little bit better. I find that the 1 hour chart can sometimes be quite crazy and noisy. So unless you are plugged into the chart all day, I'm not sure that looking at the charts in a 1 hour candle chart, it makes sense. I personally keep my chart, especially in these sideways markets and in these downtrends, I keep it on the daily just to sort of filter out the noise, not get too excited by every little pump that you see. The daily also allows you to look at it from sort of a zoomed out perspective. Cool. So basically in the intraday, we're looking at the 4 hour chart here. It is forming somewhat of a symmetrical triangle. Nothing is a given here. It can very easily break either way from a symmetrical triangle. It's not always perfect science. However, it does usually tend to break in the direction that it came from. So we should probably see something along the lines of that, which does support my green sort of prediction path going up here, which will take us to around the end of the quarter. So that's pretty much where I'm seeing the intraday chart at the moment. I'll be looking to buy from here. Of course, we had that little successful short from the top here, just down to 35-ish, which was fantastic. I'll be looking for a few more of those slightly riskier scalps. I think we're allowed to entertain a slightly more risky appetite or slightly bigger appetite for risk in our upcoming trades, so long as we are all respecting risk management. And that's pretty much it from the intraday chart. Before I let you all go, I do want to cover one thing though. I'm just going to flip this back to the daily chart. There we go. And I do want to look at some of my favorite altcoins, starting of course with the beast / the star of the show at the moment, which has been the one altcoin to absolutely hold its value, hold its weight throughout this crash. And that is of course Fantom and the Fantom network. Here's a beautiful little example of how falling channels and descending wedges tend to break strong to the upside, which is fantastic. Cool. So basically we're looking at Fantom over here. There's multiple levels of support. I do see us sort of ranging here before maybe trying to clear it up. It's all going to depend on Bitcoin, as we know, but Fantom is looking beautiful. It is definitely one of my favorite blockchains, that it has been for a long time. Another one of my absolute favorites, of course, is Polygon. I have huge faith in Matic. I really am, I'm invested in Matic. I love the coin. I love the token. I love what Polygon are doing. I love the blockchain. I think it's a fantastic layer 2 solution to most of Ethereum's disastrous problems, which we all know too well. And until Ethereum do deliver on their own layer 2 solution, which could be whenever, Polygon is a fantastic solution to that. So this is basically looking at the Matic chart. We're obviously looking on the daily. You can see that I have used here the Fibonacci trend-based extension, to sort of see where we have been from the last sort of peak and valley, where it last basically touched the higher low trend line. And you can see that it's pretty much an exact science over here. We're ranging a little bit, but you can follow the green path, and that's sort of where I see it coming. I will post the link so that you can follow this chart live. Whoever wants to, you can see my entire watch list. You can see all the patterns. You can see everything in my chart. Of course, it's view only, so you can't change anything, but it's nice to just have access to all of that. So that's pretty much Fantom. It's where I see Fantom going. Another two tokens I want to cover are Link and Dot. This is sort of where I'm seeing Link at the moment. It's in, again, look, one thing I can say, and I'll just use one of these. I think it was SRM is a good example of it. Let me have a look here. Where is Serum? Was it Serum? I think. Yeah, a lot of these tokens, and what I'm seeing here is a lot of them are basically putting in this massive M, which does signify obviously the end of a corrective position. So I do think that we are going to see sort of a move up here. And there we go. So let's just take a look at Link quickly. Of course, guys, Chainlink, I know that, it's a little bit of a disappointing investment in terms of everybody having wanted it to go up to 100 in the bull rally. Unfortunately, it's not going to happen. But one thing I can say is that just based on what Link does for the blockchain, this is an investment to get into. This is like investing in the Swift system back in the 60s. It's like investing in the ATM industry in the 80s or the credit card industry in the 90s. These guys are the people who are going to glue everything together and allow for the data to facilitate all the kinds of things that the blockchain are going to do for society. Of course, we're seeing here a rising high-low trend line as well. There seems to be some nice support. It had broken through the top layer of that, which is this one over here. Sorry, just put it over there. It had broken through the top one. It now has another last layer of support, which it does seem to be respecting. Let's just zoom in over there. It does seem to be respecting that over here. So that's cool. I'm cool with that. I'm going to be waiting to see that it bounces from here. Of course, any more correction from here would slightly be bad news for Link. But, one thing I can say is if it does drop low from here, I will definitely be making a concerted effort to buy as much as I can. We also have PolkaDot, one of my favorites. I've used the Fibonacci trade-based extension tool for this as well. And you can see it sort of fits perfectly within this range that has been identified here. Again, there's another sort of M going on here as well. The M reaches the bottom and it generally turns into a W on the other way around and the reversal. So I will be looking for DOT to come back down here. Unfortunately, it's very, very low, but that is where the most sort of heavy support is. Let's see what happens. I will be highly interested to see how it all plays out. And of course, we do have the same sort of rising higher low trend line here as well. They're not always proving themselves as great support, especially with the volatility from Bitcoin. But hey, we can only look and trade as we go along. Luna, we can just look at Luna on our way out here. Luna has unfortunately gone down quite a bit, but it has extended its higher low trend line as well. So we should see a bounce from here. 50 is strong support for Luna. Anything lower, and we will obviously see it go down to test the previous all-time highs. So that is what it is. One thing we can quickly take a squiz at just before I close this up are some of the gaming tokens. Of course, unfortunately, gaming was at a peak. A lot of people got into gaming right at the top there, myself included, with certain tokens. I'm not too stressed about it. This is a very, very much a long-term play. You will see crypto gaming and the advent of crypto gaming take over the world in the next couple of years. It is going to change how society functions because people will no longer need to go and flip burgers at McDonald's because they can sit on their phone and play Axie Infinity and earn more than their parents did in an entire year. So that is pretty much where the future is going. Sending you guys all love and strength and green candles, hopefully, for the weekend. If anybody has any questions, please, as always, just let me know. And that's about it. So yeah, I hope you guys enjoyed that. And I will touch base with you guys on that side of the weekend. Have a great weekend, guys.